It's March 1st. JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but listen, Michael Saylor is here for the long haul. He is here for the marathon. He is here for 21 million Bitcoin. He wants all of them. Of course, he'll never get all of them because a lot of them are lost and locked up in Satoshi's wallets, but you get the picture. He is number 21 for a reason. Michael Saylor is a long-term thinker. And by the way, the moat is already built. The game is already won. We're just waiting for the thesis to play out. And by the way, I did wait around to see if Michael Saylor gave a .day announcement. He definitely bought some Bitcoin last week because the stretch ATM did go burr a little bit. Probably wasn't much, but we'll see. But nothing happened by this time, so I figured I got to get the video out because I know a lot of you are, looking for great content as you're going for your walks or your runs or your drives or whatever. So thank you again for your comments, for your likes. They're all very meaningful as we continue to, I would just say, crab through these crabby times, which is, this sideways market we're in. Although, I mean, come on, how bullish is it that we had a war breakout in the Middle East and Bitcoin did drop a few percent, but then immediately recovered. And as we're speaking today, it's actually at 66,000 and change. It got up to 68,000 last night. We'll see what happens this coming week. But to me, man, looking pretty good for a weekend situation. And Michael Saylor says stretch dividend rate increased by 25 bips to 11.5 for March of 2026. And again, I called this yesterday and the day before. I said he is going to make this announcement. That is my thoughts. That is my belief, because what Michael Saylor wants is to keep raising this 0.25 bips every single month until stretch goes burr for at least 10 to 15 to eventually, hopefully, 20 trading days every single month. That's the goal. And believe me, he's going to keep on raising rates until we get there. Rob says, we are about to witness the most epic short squeeze off one of the most oversold, excessive fear positions in Bitcoin's history. Rob, I agree with you 100%. Let's go. And Brian says higher. My guess is stretch tops out at 12 to 13% before the Bitcoin bear market ends. And I think so too. I think he's going to keep raising it over the next few months because there's just opportunity that's being lost and there's opportunity cost. Every single day, the stretch ATM is not burring at 100 to 150 to 200 million in volume. The stretch should be burring. The stretch ATM should be burring every single day possible. So Michael Saylor, his CAGR, his base case is 30% Bitcoin. That's, over the next 10 years. So guess what? What's 11% to 12% to 13%? These are all rounding errors. We just want the stretch ATM to go burr. Hunter says, people are going to be stunned this year. The world's largest institutions and corporates are coming fully into crypto. Buckle up. And this is from the Bitcoin Magazine, who said, just in, Morgan Stanley applies for National Trust Bank Charter to allow the Wall Street Bank to custody Bitcoin and crypto assets. And that's from Bloomberg. Mike says, March through mid-July. So guess what? March 1st. Happy March, everybody. So we are in March. March through mid-July is setting up to be one of the most bullish periods for risk assets this cycle, and possibly one of the most bullish periods in our lifetimes. I want this to be true. I believe this could be true. Mike Alfred is the perma bull. He is the ultimate bull, but he's also a very sharp guy. So time will tell. I guess we'll see if Mike's right. I'm rooting for it. James says, over the last 24 hours, Bitcoin is up on bad news. This environment is nothing like 2022. And guess what happened in 2023 and 2024? Higher. Joe says, my time horizon is 10 times longer than yours, and my volatility tolerance is 100 times higher than yours. I prefer my Bitcoin amplified and my income digital. We are not the same. And of course, he's referring to MSTR and Stretch. Joe, your time horizon is not 10 times longer than mine. It's probably the same as mine because mine's basically forever. Maybe your tolerance to volatility is a little higher than mine. I mean, 100x is pretty crazy. Maybe you're 2 or 3x, but we're pretty close, Joe. But, for most people, obviously Joe is right. Rob says, insane. With 10-year treasuries dropping and sub 4% yield, Stretch is 7.5% greater than the risk-free rate and its return of capital dividends. So not capital gains. And guess what? Not paying taxes for the next 10 years, deferred taxes. Saylor is ruthless, raising the dividend with Stretch and closing the month at par. He doesn't want Stretch sometimes at par. He wants it there permanently. And that's what I've been saying this whole time. Michael Saylor doesn't care that he's going to be paying 0.25%, 0.5%, 2% yield more. He wants people to be winning at the highest level. He wants to be taking all of their money, all their fiat, and turn it into Bitcoin. That's what Michael Saylor wants. He is ruthless. He sees the field clearly. And Joe says, it's okay if you don't see it yet, but one day you will. And of course, what he's referring to is that this is the chart, but this is where we're going, 700,000 plus. Obviously, it's just a matter of when, not if. Rob says Bitcoin only down 1% on the Iran war development is striking, pun intended. Sellers appear to be exhausted. It shows how little leverage is left, and Bitcoin has shifted to hodlers. After 5 months of down only, endless liquidations, is anyone left to sell? Relief rally in sight? WDWT. What do you think? And by the way, at the time of me writing this, Bitcoin is actually up a little bit on the news, which is pretty nuts. So Chris says, literally, what a time to be alive right now. You get front row seats to the greatest technological transformation in human history. Yes. Thank you, Michael Saylor, turning dirty fiat into digital gold, into Bitcoin. MSTR has now gone 8 consecutive months with negative performance. Can you just say brutal? Brutal. A 1, a 2, a 3, a 4, a 5, a 6, a 7, an 8. What's it going to look like for this stretch here? Only time will tell. But I think we're due for some green. What do you think? And by the way, we're due for some green. We're also due for a great clip from Michael Saylor as soon as we get back from thanking our sponsor. When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you in your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides, even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free.
And that takes us to the question of, well, what's the performance of this stuff anyway? Well, since the all-time high 4.5 months ago, Bitcoin's fallen 45%. That's the capital investment. If you're a capital investor, you got no dividends and you lost 45% of your wealth. Just wait for 10 years, you'll be fine. I'm okay with it, but your 3-year-old's not okay with it. On the other hand, look at STRC, right? STRC is for everybody else. It's actually lost 0% of its value. It's paid 4.5% in dividends through a very bad, big capital market drawdown. Since the beginning of the year, same story. STRC holds its value and pays a dividend. Bitcoin's down 25%. Do people want this stuff? Well, it's trading 130x more liquid than the average preferred stock and 1,000 times more liquid than the over-the-counter preferreds. This is, in fact, the most successful, most liquid preferred stock probably in the entire century. Okay, and this is 6 months old, right? And I would love to tell you we knew what we were doing, but what I just showed you was we were running from risk, from credit risk, until we got to prefs, and then we were chasing after the ideal product until we got to stretch. And so at the end of our journey, after trying 10 different things, we found the 11th thing, and then the market told us they liked this. We didn't know that they'd like this. Stretch is seasoning. The health keeps improving. Here, what you can see is that each month that goes by, it spends more and more time in its target range. The volatility strips off. It holds its principal value much higher. And so what are we competing against here? You're competing against a multi-trillion-dollar universe of credit instruments. Most of them yield 3-4%. Most of them have long duration. The world of credit hasn't changed much in 50 years. You're trapped in the 20th century. Most credit instruments are created by issuers whose objective is to pay you the least amount they can with the worst tax treatment, right? When a conventional credit issuer issues credit, they're keeping the tax benefit to themselves. They're minimizing what they pay you. And the irony is when it's over the counter, it's illegal for you to buy it. Huh? Say that again. Most credit, it's manufactured to be awful, very tax inefficient, and it's illegal for you to buy it. Well, why does that even happen? That's just the way the world was 30, 40, 50 years ago. What we've done is flipped it on its head, and our view is, well, we actually want to pay you the highest possible dividend, make it tax deferred, and make it easy for you to buy it, right? That is the credit revolution. So why do you have to wait 10 years to find out if you get paid back? I mean, strip the duration down to a much shorter amount, increase the dividend, and then make it easy for the individual. So what's the tax equivalent yield on this? If you're a company, well, let's just start with the number. It's 11.3%. If you're a company, that's the same as getting paid 14.3% because you don't have to pay corporate income tax on this. If you're an individual in Miami and you are able to defer the 37% federal income tax rate, it's like a tax equivalent yield of almost 18%. How's it compared to everything else? Well, you can see it's anywhere from 50% to 4 times better than all the other credit in the world, right? And the next best thing is like private credit, which is sort of illiquid, and it's half as good for a taxpayer, and it's 60% as good for a non-taxpayer, just on the basis of yield. What if you're lucky enough to be an individual living in New York City? Okay, digital credit is like a bank that pays you 23.3%. If you live in San Francisco, it's like a bank account that pays you 22.6%. Okay, so as you can see, this is, 4 or 5 times better. Okay, what else did we discover? Well, when you create an instrument like this, it's return of capital. It means that you collect a dividend, you defer the tax on the dividend, you reduce your basis in the instrument, and after 10 years, you've reduced your basis from $100 down to 0. If then you die and pass this on to your heir, they get a step up in the basis, and it steps up to $100, and they can start the same depreciation again. So you actually get the benefit of shielding your 10 years of dividends, and then your heir gets to shield another 10 years of dividends. Now, I'm not suggesting that you run this on 10-year cycles. But what I am suggesting, more to the point, is the difference between investing $100 in a T-bill and holding it 20 years versus investing $100 in Stretch and giving it to your heir and them holding it 20 years is, at the end of the 20 years, your heir has $922 of Stretch, and their income each year is $100 versus $3.75. You literally have 25 times as much income after 20 years. If you're interested in generational wealth transfer, this is an incredibly powerful vehicle, right? It's like, it's so powerful, it kind of makes you sick to think you might pursue the alternative. And if you're a company, you can see that, your choices collect 3.6% from a money market, or the equivalent of a digital bank that pays you 17% in New York City. What's the second best? There is no second best.